Good morning, good afternoon, and good evening. Doc here from North America. Another fun-filled day. It is Tuesday, and we are looking at the markets. They're kind of, I don't know, what do we got there? That's, I wanted the Swiss. So let's get that Swiss up there. It's on J4X. You can see that there at 91.06. And there it is on the Chicago Quant. You know, and they're moving down, so that means the dollar is going down, and the Swiss is gaining value, so I'm sure the euro is acting just as firm. You can see here on the J4X, this product is moving in the downwardly direction too. In other words, our indicators that we use over there is pointing where it is trying to go down, down, and down. So let me see. Let me go to the chat line, make sure nobody's chatting away to me. Let's see. Oh, there we go. I see Ferris. How you doing? What do we got? There we are. You can hear me now. I see. Markets are scary today. I feel like they can go either direction. Well, they usually can do that. There's no doubt about that. We used to have a saying on the trading floor: if it's not going up, it's going down. And some people would go, yes, but if it's going down, then it's not going up. So yes, I agree with you there, Ferris. 100%. Let's see now. So, see, Ferris says, difficult to have an edge today. I would say that there is no edge for like the next 5 weeks. That's what I keep on trying to get through to everybody around here. This market has very short half-lives. And what it does is it jumps around to the liquidity of a particular fund trying to close a position, or some odd news that comes out that wasn't anticipated, and the markets make a quick shift, or just not even counting the geopolitical situation, especially for the United States. It just goes on. This is the end of the year, and because there is something called taxes, and the government puts tariffs on everything and anything throughout our planet, what happens is at the end of a year, everybody has to be kind of sized up to their exact profits and losses, and for the average person, their income and so forth. And so what happens is that big money is trying to get into position to adjust for the end of the year. And here we are, November 17th, which makes it basically under 6 weeks now to the end of the year. So it gets all kinds of sloppy. That's the way it's supposed to be. Andreas Rodriguez? Cool. Hello. How about if I just call you AR? AR, how are you? We are just getting rolling along here. We're just taking a look at the way the dollar is acting against the Swiss, and then we kind of cruise along to see how it acts against other products at the same time. At the same time, I give you my 10-cent opinion about the markets and why they act the way they do. And sometimes we're even right, which is really cool. And we look it through a quantitative way. Through the Chicago Quant, you see two different charts up there. You see J4X from Dukascopy. And then we have the Chicago Quant one above that, or behind that. And so they both have the Swiss on there. And we're giving you the full interpretation of how we're reading the markets through both of them. And this one right here, you can create yourself. And this one is ours with our proprietary math. And we really fight to find a way to give you something that looks a lot like our math. But it's very hard, of course. But we do. We succeed. We use slow and fast-moving stochastics with a CCI, which is kind of neat. Gives some real insight to the action. And we use hinky, ashy bars to emulate our cute little dots that we have on our chart up top in here. So that's what we do around here. I hope that makes some sense to you. And you know what I forgot? I forgot my teacup. Let me just grab my I like the smiley face. That's cool. Let me just grab my teacup. Give me about 7 seconds. 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13. I guess it was 7 seconds in each direction. There we go. 7 seconds in each direction. All right, so that's what we do around here. So now let's take a look and see again what we're looking at here. But, if you have a desire, anybody has a desire to see anything in particular, I don't care what it is. T-chess from China, I don't care. Oil, gold, you know, New Zealand, Kiwi, whatever it is, Australian, whatever, Canadian, whatever it is, we'll put it up on the screen instantly, and we will try to figure out what's going on with it through all this mathematics and crazy ideas and so forth. Then in the end, don't turn out to be too crazy. They seem to usually more validity. We have an 8.5 out of 10 time accuracy rate, so that's pretty cool for over decades and decades and decades. And we have a fact check spreadsheet right there on the left. This thing right here that you see, that fact check spreadsheet. See, there it is. Fact. See, we can do that. Fact check Excel sheet right there. It shows you how long our math says something has been in a trend. Our trend, defined by this screen right here. And so, and this is the weekly trend right here. These two. Let's try that again. There's the weekly trend, weekly buy or weekly sell. Like the Turkish lira is a hoot. It's been in a weekly buy for 50 weeks. 50 whole weeks right there. And then when we go in and we take a look at the Turkish lira right there, you can see it has been in one massive move for a long, long, long time. Many, many moons. And we are now flirting, as you can see here. Our white line is broken underneath. If this histogram on the bottom chart there goes minus, with the white line, that will knock out that 50 and put a 1 in the box, and it'll be in a weekly sell for the first time in almost one whole year. It's 4 days in a daily sell. We have a shorter term indication we're paying attention to at the same time. And so you can see therefore, like just above it, the Zloty against the euro has been in a daily sell for 10 whole days. And you can see, oh, look at this. So we had not seen 3 red dots. You can see we have 1, 2, 3, 4 red dots there in something like 7 months. I mean, we've had 3 dot down, 3 dot down, or 2 dot down, empty there, 3 dot down. And it's been like that for, I don't know, bunches and bunches of months until finally back in June, I think it was, or May or something like that, where the product had gone into a sell. So you can see here it's trying to bounce up a little bit today. Matter of fact, you see how the white line on the daily, which is the middle chart there of this is our algorithm of the daily. This is the algorithm of the weekly. And then you can see the daily chart up in here. And so you can see here it's trying to get back into the buy. And that's how this whole charting thing and webinar goes. We just rock and roll. Gold! Let's take a look at gold for Ferris. I am short gold. Yeah, that's right. You said that yesterday. Was it yesterday? Yeah, it's Monday. So did you take some profits on half of it or do something? I said to you it's kind of dormant, really. But let's go check it out. In this end of the year stuff, you just don't want to try to bet on any major trend, that's for sure. All right, let's go over to gold. Right there. Yeah, look how dead that is. And you can see it's trying to bounce up in here. Let's give it a refresh. See what it really looks like with our mathematics. And we're going to go over to here to J4X and slide it in there too at the same time. There we are. And you can see all these red dots. It's been a real sloppy action. It went into a weekly buy last week, which is curious. And you can see it's trying to lift up, but we can't even get a green dot out of it. And we can't get into the daily buy. And we want these two to be in unison. So if we're in a weekly buy and a daily buy, it's relatively safe to be long because you can see the statistical success over here. But if it's in a weekly buy but in a daily sell and the red dots and all that stuff, then it's a neutral. Just be neutral. In this case here, Ferris is short the thing, and he had profits yesterday when we talked about it. And I did not take any profits on that dip. Oh well. Well, you go, that's the way it rolls sometimes. Unfortunately so. Because then you could go sell it again higher. As I sip my tea, I did not take any profits. Oh, hey, K Live, how are you? I went with the let your profits run. I don't believe in let profits run. I think that was made up in 1930, 1940, 1920s. I don't think that has much of a... I've mentioned that many a time here. I think I should go through that again. Ever since the creation of listed options, which removed the zero-sum factor in trading in 1976, basically. starting off in the middle or later part of 75. Created in the cloakroom of the smoking room where they used to go drink and smoke and hang their jackets up was the Chicago Board of Options Exchange, CBOE, owned by the Chicago Board of Trade, the CBOT, a futures exchange. And so, ever since the creation of options, it has removed the concept of let your profits run. There is no such animal anymore, solely because the zero-sum factor is gone. When you have a zero-sum factor and you have a limited amount of buyers versus a limited amount of sellers, and a seller is usually someone who's getting out or going short, that makes some sense. But when you have, in the age of 1976 up to now with listed options, that does not count anymore. So in other words, a seller could be someone getting short, someone getting out, someone, what else could there be? I guess they're the only two things you can do when you're selling, get short or get out. I guess that's about it. But remember, selling doesn't mean you were long, whereas before listed options, when you sold, you were long or you were getting short. It was one or the other. And now it doesn't mean that. And so letting your profits run don't exist anymore. And that is how I try to explain that. I hope that makes some sense. Does that make any sense to anybody? You never know. Sometimes I say things that are so factual that they make close to no sense whatsoever. You're hoping that Brent is bullish. Well, let's go take a look at oil. Let's see what oil's doing. Oh, and also let's go look at the fact check spreadsheet. Dun, 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 dun. Now, how did that end up in a... Yeah, that should be in a sell, right? Because I don't see a buy in there. So that should be a sell. How many was it? 1, 2, 3, 4, 5, 6 days. That shouldn't be a 1. I must have hit the 1 for the crude oil and ended up in there too. Okay. So that's like 6 days in a sell there. Let's go check out crude oil. Now we only follow the West Texas Intermediate right there. And now how did that end up? Let's see. Is that expired? No, that's the 17th. Now how did that end up in a 1? What is that? 1, 2, 3, 4, 5, 6, 7. 7. That's a 7. I don't know how those 1s ended up in there. What was I clicking on that was 1s? And then let's reload this just to confirm. Yeah. So that's 2, 3, 4, 5, 6, 7. Going on an 8th day. We're in a weekly sell for 2, 4. Why does it say 3? Huh. Interesting. I'm not sure why. It should be 4. What date is this? I'm wondering what's wrong with the spreadsheet there. How did they get all screwed up like that? All right. At least gold has got the 1 for there. Maybe that was what it was when it was the 1s were going in. It got pushed around. Now, how did that end up as a 3, not a 4? I don't know that. This is going to be expiring. This is West Texas Intermediate, and we follow the West Texas Intermediate. I think there's probably a pairs trade or an arbitrage for Brent, so you can probably subtract one to the other and go with it in that sense there. But where is Brent now? I can see Brent on the CNBC website. I don't subscribe to ICE. So we don't get those products. Let's see. Are we heading? We're not heading for a weekly buy, as you can see. Right. I mean, where's Mr. Mouse? You can see we're not heading for a weekly buy at all at the moment. It's still turned down. And you can see the daily is having its issues, but it's pretty darn firm ever since the coronavirus cures have come out. You know, they pretty much cured this thing. I'm not sure why people are acting the way they are with it. Now that we have a 90... Do you know that the regular flu virus has only a 67% accuracy rate, whereas we're looking at new accuracy rates of almost up to 95% on this coronavirus? So I'm not really sure why we're being so ornery about it all. It seems like if you just do the basic hygiene, and if you catch it, they can give you something for it. I don't see enormous death rates. That's the thing that's a little confusing to me. Isn't death kind of like the reason why you really pay attention to these things? And if not a lot of people are dying, then why are we paying attention to it? That's usually the key there, right? Death. Isn't that what we're really looking for? Is a lot of deaths, and we go, oh no, we don't want to catch that. All right. Let's see. Let's see. We were looking at Swiss, so let's take a look at the euro. I hope I answered you with the oil there. I'd be a little cautious because it's still not showing us any real strength on the buy side here. Now let's go over and take a look at the euro. See how Europa is doing today. I would imagine it's firm because we're seeing the dollar Swiss go down in value. So that's usually an indication of some strength there. And let's put it up on our Chicago quant. Right there. And so you can see on this, the white line went through this dotted line, which we like to refer to as the three-dimensional zero line. And then you can see here the CCI has been very firm. And you can see some greens on the bars. So just like our green dots there, it's showing strength again. And you can see our white line is through. We were in a daily buy from there. So that's 2 days back. And that would be line 14. Yeah, right there. Now those numbers are accurate. 2 days in a buy, 4 weeks in a buy. And let's put, I know I put that line in yesterday when we talked about this, but it disappeared again. And there it is there. We're in a daily buy. We just try to remind you where we are. Actually, it didn't never, where did the sell go? Let's just put that in there too. Make that red. There we are. So that's where we are with the euro. You can see the euro slowly advancing, showing strength. The dollar is obviously going down a little bit in here. And you can see it through the Swiss. And you're actually seeing the Turkish lira. We looked at that real quick just to exemplify what those numbers mean. Pretty much, the dollar obviously is going up in value and the Turkish lira is going down because it's rising. So that's where we are with those two products and that third one. Now we can drift over to the cable. I think cable's playing with a buy today. Matter of fact, I think it has a little line through it. Does it? Let's see. Let's go to the cable. Dollar, British pound. You can see right there, it's trying to get into the buy. It's got a little green dot there. The white line is above the zero line. That's the zero line right there. Histogram's through it also. We're in a weekly buy for 2, 4, 5 weeks. Let's go over to here. Find Mr. Mouse. Line 13. There's the 5 weeks. And now that's saying 3 days down. Right. Okay, that makes sense. And so it's trying to get into the buy today. That's what it's doing right now. And you can see it's trying. It's doing some good work. If it closes like this, that 3 will disappear right. Oops, let's grab this mouse right there. That 3 there will disappear. We'll be putting a 1 in there at the end of the day. And that's how that rolls along. AR. No problem. No problem at all. We like to pontificate about what we see in the marketplace. We don't have a trading floor anymore to go to scream, yell, and give my 10-cent opinion about it. So what we do is this is like the cyber pit. That's what I always think of this. This is a cyber trading pit. People come in here. They're interested in trading. They want to know about the markets. It's the cyber trading pit. As I take a bite of an apple, remember it's breakfast time here in the States. So that's what we do here. We talk about the markets. We look at things. We see things in the news. Now, yesterday coming in, we saw all that blockchain stuff going on in China. We saw the news about the medium loan fund or something like that having issues and having almost $900 billion, not million, but $1 billion in debt. And liquidity was drying up. And, we look at all these stories, see how they relate to the marketplace, if they have any relevancy, or most times, most of this stuff is already in the market. Now here's one, Ferris. This is a saying you can trust. Buy the rumor, sell the news. Because money usually knows what the rumor was ahead of time. They get in it. Then when the strength comes in, when the rest of the people come in and funds and whoever, the retail come in thinking that they're going to jump on the news, the big money sells the news because they've made their money. And so that's a good one that I still trust. I do trust that one. But when it comes to letting your profits run, that one is a little thin because the volatility has increased so dramatically. See, when that concept of let your profits run was out there, products moved 1% in a year, 0.5%. When I was a young guy and I was a member at the New York Stock Exchange, those old guys used to complain all the time. You know, oh, you option guys are wrecking the market. You know, things used to move 0.5 point in a year. We could ride things. Riding a trend back in the old day when it was really a functionality. When you rode the trend, you were riding a trend of a 1%. If you rode a 2% trend, that was unique. And that was over the year, not over the week or the day. In this era, we go up and down 1% in a day with no problem. 2%, 3% in some stocks. And so that was the rationale of it all. Ooh, what do we got there? AR says, I have GBP cable. Okay. With 6.42. True that. I like that. Hell yeah. Yeah, that's exactly it. So with 6.42, what do you mean there? I have a GBP. You mean you have a GBP position? I think we have it up there still, don't we? Yeah. So you're looking at the cable. Do you have a position on in that? Is that what you're saying? That's kind of cool. And you have what, a 6.42 profit in it, maybe? And so that is when the trend is your friend and let your profits run were invented. And traders would buy a stock or buy a product and it would go up $0.50 in a year. And so that you were racing around trying to trade a trend or ride the profit for an eighth. You know, first of all, it was a 16th, then an eighth, and then 3/16ths, and then a quarter. Is that right? Yeah, quarter, which is 25 cents. And then, you know, that could have been like half a year of action. And then, you know, it falls back down to 3/16ths, and, you know, the 0.25, maybe it goes down to an eighth, and it does that half point correction that the Fibonacci, and then it tries to climb up again, and now you know it's trading at a half again. No, it was trading at a quarter. And so then it trades at a quarter again, and it gets up to 5/16ths. And by the end of the year, the stock is trading up a half for the year, and it's up like 1 or 2% for the year. And you're collecting the dividend. And that's what meant trading, the trend is your friend. So, oh, you have that much profit. Nice, nice. Well, you know, it's starting to look very positive. The daily, as you can see here, is trying to get going. Let's put it over here on our J4X. And cable dollar. Cable. There it is. And so, so what you have here is you have, matter of fact, look at that. It's trying to get through the dotted line. That's very bullish. This is above already. You can see the two green bars, which are lagging indicators. You can see ours has a green dot there. And we are through our zero line. And we've been in a weekly buy for a while here now. So, yes, there's some good potential there. I think that's good. Now, that one you can try to... I myself am very fast to always take some profits. If you keep on taking profits, it's pretty hard to lose money. And it depends on the type of position you have on too. I mean, if you're using options and the underlying product, it's a lot easier to ride a trend and let your profits run. If you're just trading outright naked, hard delta, it makes it a little bit tougher, that's for sure. Another bite of the apple. So that is kind of, you know what, we could actually talk about that as the title of this market today, or this webinar. We could call it, what's that word? How do you say it again? Let me take a look at it. Let your profits run. That's right. Let your profits run. I think we'll label this webinar, Let Your Profits Run, because we've really been spending half of it already discussing those old concepts and how they worked, how they were invented, what was the rationale behind them, why they don't seem to have the validity that they used to have. So AR is like riding the British pound up. Cool. Yeah, we were usually very bullish on that product overall. Cut your profits short and cut your profits short and let your losses run. No, that's not good. That's not good. No, you won't win that way. Nope. I don't see how far up. I I would assume that first of all, again, we're in the last 5 weeks of the year, and so if the exchequer has to flatten things out for something, you could get caught in the cross currents of that. I myself would take half your profits right now and put a stop in so that you don't lose any money on the other half that you own still. That would be a good money management concept right there. So we don't know what they're going to do. Usually it happens, it can be like tomorrow morning, it could be 3 days from now, it could be 2 weeks from now. You just don't know when they have to flatten their portfolios. And then I'm talking about the exchequer. We've seen this happen before where the Bank of England goes in and borrows money like they are a private bank from the Federal Reserve. They do that type of stuff. It's really weird. And then we document it and we show it in the webinar and we scratch our heads at that whole thing. So when it comes to how far up, I guess you could do a couple of different things. If you're trying to guesstimate, one of the things always is using the Fibonacci sequence. And you could probably go and take, say, I guess it all depends. If you're invested for weeks or months or years, it depends on your length of investing. So if you took the low here back in, was that May 15th, May 18th, where it was at, what was that? The low was 120.68, okay? So you could be taking something like that, looking at if you use that high right there, you can see where it went. Let's just play with that a little bit, just to take a look at that. So you look at this, then you look at that, and then you can see it went to the 50 percentile right there, stopped, bounced around, played with it, supported underneath it, and now it's made it a run back to that number. All right, so now that's one way of trying to speculate how to guess where it's going to go to. If you're looking at the fundamentals, I mean, you can see there's a 116 back in, what's that, March of this year. And you could take a look at the same thing and see how it acted. Use the Fibonacci in that sense. You could take a look at a big, broader view. Let's go over to J4X. And where's Mr. Mouse? Right here. We can make J4X really big. And you could put like a weekly in there and do the same thing to that. And pick out the lows and the highs. Here we kind of think, my personal opinion is, from all the research we watch and do and so forth, is that we really believe that the cable should go higher over months and years. Okay? You can see this high here was 140 and change. That was kind of like the pre-Brexit price range, really. It was in the 140s, almost 150, before the Brexit occurred, about 5-6 years ago. And so, I mean, you could be taking a look at this low here in the 113.5 area, all the way up to 143.5 area. You could be doing that. What's that? 30 points. And so you could be looking to see if it's going to go challenge that. It all comes down to you and how long you're thinking about the trade. Did you put the trade on for 1 week trade? Did you put the trade on for a 1 month trade? Did you put the trade on for 1 year trade? It's all up to you. What we always say, what gets you in gets you out. And so that's usually the best way to look at it, is what got you into the trade. Whatever got you into the trade should get you out of the trade, and that's how you should decide. How'd you say it? Let me see. How'd you say it? You don't know how far up. What got you into the trade to begin with that said that it was going up in value? Take a look at whatever decision-making process that was, with what technical analysis that was, or whatever made you do that. what that was, and then you were able to decide to know. You can come up with a conclusion of what will get you out on the upside. And if you just say, "Oh no, I just flipped a coin," then go flip the coin again, just to see what to do. And you could always take 50% of the profit and ride the other 50% that you have on. And so that's just basic money management, nothing more than that. How's that? I hope that answered some of the question there. Let those profits run. It's 1962. It's let those profits run. It's 1974. Let those profits run. Yes, indeed. But it is now 2020, and let those profits run can be literally in an hour, which used to be when that expression was created, was a year or 6 months or something very long, a very long duration. Okay, I hope I'm making some sense there. All right, where should we go from here? That's cable. So, what should we look at next? We usually go to Turkish lira. We'll do a quick one again with that, since we were just using it as an example. As you can see not right there, you can't see. As you can see there, it's trying to lift back. Let's put this on there too. Right. Where are you? There you are. Now it's a weekly. Let's make that a daily again. Oh, you know what? Let's look at it in a weekly. Yeah, look at that. Last week I had a red candle for the weekly. It's doing it again this week. Ours broke underneath the top blue line, which is a mirror image of each other. We call those time manifolds. And when the white line breaks underneath it, it tells us that there's some weakness coming. And sure enough, it did close underneath there. But you can see that overall it didn't go too... Let's see if we can get hold of that mouse again. As you can see right here, it closed there. And then went down again, but didn't take out the low yesterday of Friday. That's Friday. This is Monday. It didn't take out that low, and today it's lifting back up. Our math is turning back up on it. So we'll see how that goes. They changed the news. What drove this thing down was news about the finance minister and the sovereign fund chairman resigning for health reasons. They were one and the same. The finance minister and the sovereign fund chairman were the same person. Let's see. Middle age. Good. Could we look at March silver? Yes. And March corn. Hell yeah. All right. Let's jump over to that. Let's see. First one was what? March silver. So, you know what? I don't think we're following March yet. But we can. Let's load it in. We have D silver at the moment. So let's go there. And there's Dees. Let's make a copy of it. Let's see, copy. Right there. And then paste. Now, let's put March silver in there. Let's see, so that's SI. Add symbol. Oh, I have it there. No, we don't have it there. SI. Look up. And let's put the March silver in there. And that will be H1, right? Right there. H1. Right there. H1. Now, close. And then what we do is we look at SIH1. See how that plays. There we go. Now let's put the weekly in there. SIH1. There we go. You can see, now that's interesting. Look at that. It's been in a weekly buy for 3 weeks? Okay, 2 weeks. Just like the deck one. So DEC has been in a buy for 2 weeks. It's been in a buy for 2 weeks. And let's write what this is too, so we know what it is. This is March silver. And we'll get file save. Now what's curious, look at that. No, I guess, yeah, that's all right. It went into the buy there too. That's Friday. And then Monday they tried to lift it up and just can't get this thing going, can they? And there's pressure on it again today. Look at it, the histogram is starting to break underneath. So let's widen that just a little bit for you to see, like that. There we go. And it's just on the edge. So this is plot 4 is minus 0.5. And the white line, obviously, you can tell is also minus 0.3. So they're pushing down. So there is the March silver and March corn we have on there. Let's go find March corn. Where's March corn at? Oh, I know where we got to go. And let's do this. Save workspace. Save workspace as Robin combo. Save. Yes. Now let's open up the corn. Right there. Let's see what's going on there. Yeah, I think well, I guess it's some of these products. The switch is only days, like crude oil. They're probably still trading the December one until was it like Thursday or something like that, and then they'll switch from there. Now let's go to there's March corn. How about that? I was looking at March corn, and so it's trying to get into a buy. I'm not sure why that's there. We'll remove that, but it's trying to get into a buy. You can see that. It's not doing it now, that's for sure. And that's yesterday. Okay, let's reload that. And still trying to get into a buy, but it's because it was on the edge yesterday at one point, trying to get through. You can see now it's minus 0.25, and the plot 4 is minus 0.50. You see that in the little white box we're shaking, like that right there. So it needs to do a little bit more work, but we're in a weekly buy for a while now. Speaking of which, I'm going to go back to that, what were we looking at before? Silver, that's it. Let's take a look at how the weeklies were over there in the back months. Let's do a whole resync of this thing. There we are. So it seems to be working really well following the front month. And then it just missed going into the buy there, but made it in there all that week for that daily buy. So how is that mature? Middle age. Muscle. A-okay? I feel like I'm middle-aged muscle. I like that name. Hey, AR, what happened? I see that. It says message retracted. Did you say something nice about Trump? They say that nowadays. If you want to know if you're saying something truthful or not, if it gets removed by YouTube or Facebook or Twitter or Google, then it's truthful. And if it's put up there, the chances are it may not be truthful. So there it is. That's kind of interesting on the March silver there. All right. Where do we go from here? Any other product? We did look at the gold before. What else is there? Let's take a look at platinum. See what platinum's doing. January platinum is looking very strong there this morning. Is that today? No, that's yesterday. See, let's see if we can reload that. They're not trading that at the moment yet. There probably is a pre-market somewhere. Looking firm, trying to lift up, But I mean, what the difference between that? It's over $1,000 now, right? In gold. Let's just take a look at gold really quick. I mean, gold is, whew, you know, gold is where 1886. I mean, that's what's kind of curious now. We're at that point in time where gold is like twice the value of platinum. I don't know if that's an industrial thing or what, but it's definitely not that positive. Whereas crude oil here, you can see there, same situation with the weakness, and I guess the pandemic and global growth and all those things have to fit into this scenario of what people are chasing after. So we just kind of, it's the middle age. I used to post weight training videos. Ah, that's cool. So you're was that like the Arnold Schwarzenegger thing? We will pump you up. That's cool. Sound mind, sound body, sound body, sound mind. That has been a very strong mantra of mine for 5 or 6 decades at this point. You know, we always believe that you need to exercise and get your body in shape, keep it rolling along. If you don't, you'll lose it. Basically, that's what happens. Not counting you lose it mentally, but you physically, it won't do things you want it to do. So I hear you there. What else is there? And then, oh yeah, let's save this too. So this thing's trying to bust into the sell here today. Why don't we put the little red thing up there like that? That's the action. And we'll save that. Silverado. There we are. Let's see. You like the fundamental analysis? Not particularly one way or the other. Janos, the head analyst around here, we've had this conversation a lot over the last couple of years, how fundamentals are so much further away from the action anymore. When you read the fundamentals and then you try to trade off those fundamentals, sometimes they just don't have the same validity that they used to have before quantitative easing. Quantitative easing has kind of removed fundamentals. Yeah, I'll go with that one. It's preferable to combine fundamentals with technical analysis. That's a much safer play. That really is. And, I mean, like right here, we're looking at the bonds. You see bonds have been in a weekly buy for 1 week. They haven't really gone anywhere. The bigger question is, why are they buying bonds? What's the fundamental? In the old days, the reason why you bought or sold bonds was because of growth and inflation. Now, how do you measure growth when you have quantitative easing and there's almost 15 trillion invested in minus investment tools? In other words, you buy it, you lose money instantly. So how do you measure those fundamentals in this era? You see what I'm saying there? So you have to combine both together, the technical with the fundamental, because good question. It's like, what justifies growth, and then the second one, inflation. Traders used to move in and out. Funds would move in and out of bonds specifically because of inflation. And hence they would move into gold because back then there were no options. So, you had to do one or the other. If you saw inflation coming along, what you did is you sold a little of the stock that you were long and you bought a little gold. And that would help to balance your portfolio out. And so those days of those fundamentals are kind of, how do I say this correctly? Like, that's natural gas there. How do we decide? Natural gas is a little bit easier to decide the fundamentals, and because it's supply and demand. But how do you do that for bonds or a stock that's trading at 200 times earnings, and you go, this is insane, I don't want to buy it, and the next thing you know is that 6 months later that stock is 50% higher, and it's still at 200 times earnings, and you're like, this doesn't make any sense. So, hey Daniel, Bitcoin, now Bitcoin, we were hoping Bitcoin would be one of the the products that would lead us out of this malaise in some aspect, if you want to look at it that way, you know. That would be the recipe right there. Let's take a look at Bitcoin. And there's RoboGaz. Let me just load that and save that. And we'll take a look at Bitcoin here on the next chart. I just want to save this one. And that's Robo right there. Okay, now let's go to Bitcoin. There it is right there. And you can see Bitcoin today is trading at 16,837. The high today is 17,285. You know, you know what I saw, Daniel? I thought of you yesterday. One of the bank analysts put a price tag of $319,000 on Bitcoin. Remember, you were saying 100,000. I thought to myself, my God, Daniel was so under, and I thought that was outrageous. But you're 30%, you're 67% underneath. I think it was Morgan Stanley's bank analyst on cryptocurrency said cryptocurrencies, was it Citi? Okay, Citi, yeah, 319,000 makes you look like your numbers look small. It's like, how can but you know what? As I just said, in this era of quantitative easing, and federal and central banks as the buyer of last resort, you have no idea anymore how to measure fundamentals. I have no idea. I mean, the fundamentals of cryptocurrencies could literally be that one thing you and I were talking about, and that is the inventory. You know, how much inventory is going to be out there, right? They're going to stop making Bitcoins, in another 5 years or 6 years, something like that? 3 years? And so then all of a sudden, it becomes a fixed number of inventory. So that really makes it really questionable. Not questionable in a bad way. Questionable about how do you decide what fundamentals are in a product like that to begin with. To me, I'm thinking volume of inventory. So that's one. That's really important. That's why I gravitated towards that right from the beginning. Let me think. What else? The integrity of the financial system. Now, I'm not a big fan of thinking that Bitcoin can survive a chaotic world. In other words, it survives because of, let me think, how do I just express this? It survives because we're in a technological world and it's allowed to play. See what I'm saying? So in other words, if the world goes to hell in a handbasket, it's going to be a little hard to accept cryptocurrencies that can survive it if you don't have computers. The ultimate chaos. Now, in the interim, in other words, right now, the cryptocurrencies make a lot of sense because the world is not going to hell in a handbasket, and so, there's computerization and so forth still there. But, that's what other fundamentals are there really? The amount of outstanding inventory and the validity of the overall banking system, it's the assets. So in other words, we know that there are over $15 trillion invested, in different currencies, of course, across the planet, mainly outside the United States, that are buying bonds for a minus. So in other words, they buy a bond, they owe money to own the bond. No, not to buy the bond, but in other words, let's say they're paying interest to buy the bond. They're not receiving interest on the bond. Okay? So that's a real challenging thing there, And as you can see here, we've been in a weekly buy now for 9 weeks and a daily buy for, I don't know, what is it now? 27 days? 26 days? Let's go down. Where is it at? 27 days. 9 weeks and 27 days in a buy in this product. So what? 5 goes into 27 5 times. So half of those 9 weeks we've been in a weekly buy. Over half, almost 60% of those that weekly buy we've been in a daily buy. Oh, AR says because I'm reading Morphy technical analysis. Oh, Murphy. He is brilliant, and I've decided to play long term. Smart. Oh yeah, John Murphy was wonderful technician. Guy made a lot of sense. I think he worked for E.F. Hutton and maybe or I don't think it was Smith Barney. It was the other one, Shearson. I think Shearson, Lehman, and Rhodes. I think he worked for one of those old brokerage houses that were very successful on Wall Street for like 100 years or so. And Murphy was brilliant, and he was part of the era where technical analysis was not respected. Now, when I started in this business, I guess you can call it the business. When I started in the markets back in the late 70s, technical analysis was not a respected area in the marketplace. It was all fundamentals. Fundamentals carried everything. But now, they used to do these polls. You ever see those polls where they see who's bullish and who's bearish among fund managers, and they used to be always wrong at the bottom and wrong at the top and things like that? In other words, 72% of them would be bullish with the market at all-time highs or something crazy like that. And the market could be down at 10 years lows, and they'd all be bearish. It'd be like, what? And they used to say, if you get past 73% or 67, I guess it was 67%, the market would turn. So anyway, they used to do every so often, once or twice a year, they'd ask money managers in what they use for decision making. They would say, do you use fundamentals? Do you use technical analysis? And it always was 6 or 7% would say they use technical analysis, and the rest would say that they use fundamentals. And then there'd be I guess it would be 6 or 7% would use technical analysis totally, and then maybe 12 or 13% would use a combination of technical analysis and fundamentals, and then the other 87% would be using all fundamentals. But yeah, John Murphy is outstanding. Yeah, he was great. I used to be on the TV show once in a while. He was a brilliant guy. Could you take a peek at the SLV? Yeah, that's the ETF. Sure, let's take a look at that. Let's see, where should we put it? Let's find a spot to put it too at the same time. Yeah, this is the silver ETF. Right. Stock combo. We'll put it in there since it's really a stock. All right. Now, what do we got here? We can make a copy of GDX. Someone's following GDX right now at Chicago Quant. So I'll make a copy of that. And that's an ETF too. No, I don't think it's an index. I think it's an ETF. Let's see. Paste window. Over the years, we've looked at the SLV and used the SLV. There we go. SL. There it is right there. SLV on the weekly. Let's see how it does. Now it looks a lot like the silver. We can just do this really quick. Go to the silver and just tighten it up a little bit. It has the same type of pattern going on. That's back to, what is that? Back to July, right? There's July, then August. Okay, so now we go to that, and let's just scrunch it up a little bit more. It has the same type of characteristics. I'm not sure what that's about, but that's where it went into the sell there, the weekly sell right there. And then we can move that one out of the way. And it goes into the weekly. We move that one out of the way too. And that one, did it go in there? No, that's a minus and a minus. But it went into a buy here. And what is that? Let's move that out of the way, see what's going on there. And that is a minus 0.1, and the other one's a plus 32, because I think we're using the gas line 3.5. Nope. Okay, so it's plot 4 and plot 1. So it actually went into the weekly sell last week. And now it's trying to go back into a buy. You can do one of these little circly things to emphasize that fact. And so last week it actually slid into the weekly sell. Plot 4 was minus 0.02. Plot 1 was minus 0.1. I would say that, notice how plot 6, which is the 5 on the super, when I usually have that up, a lot of times I'm using the super, and this one's not using the super. Let's turn on super and see how it looks. Let's see where we at. And let's make that a line and make it green and turn it on. Okay, so yeah, see it broke down here, and then did it allow it to, yep, it's got into the sell there, and then did it get into the buy here? Plus 25, plus 18, it went into the buy, and then it's not in a sell. And let me just turn off the other one. And we'll make that the histogram. I'll turn this histogram off. So that kind of makes some sense in there. And let's go back and look at how it has treated it at times. I guess if we widen this, so put it into the buy back here in the 15 area, and it never really let it loose. It did the same thing as the futures contract, you know what I mean, Middle Age? No problem. Let's see. All right, anyway, it's been fun. This is Doc from North America. We will catch you all tomorrow on Happy to Hump Day, Wednesday. So happy trails to you until we meet again, which is tomorrow. Happy Hump Day. Happy trails to you, to all